Welcome in traders. In this video, we're going to go over today's trading session. We are currently looking at ES and the time frame we are using is the 2000 tick chart. Now, the only supportive indicator I use is the 21 EMA, which is this purple line that is oscillating in between the candlesticks. And other than that, I solely rely on price action and trend lines to look for high probability setups. Now, looking at the pre-market session, the first thing I like to do is to identify the support and the resistance. Now, these key levels play a huge role during the trading session because we can see if price is either being contained in them and being in a range, or we can see if price breaks out of them and turns into a new trending structure. Now, what I did is I drew out the support and the resistance, which is this purple line. We're not really much in a range here. The market is still opening, and this is just the pre-market session. The bell hasn't rung yet, but judging it, it looks like we had a nice spike in volatility up. This small uptrend had a break and a new high, and now we are waiting for the market open, and we can expect volatility, right? So the market opened right around here and we had a downtrend in play. I was looking to take a short position. We never had it. We never touched at the EMA. And remember, guys, most of our entries are at the EMA or key entry points such as trend lines. So we had a break, new low, and then we ended up touching the EMA, not managing to reverse, right? Because if we were in a range, we would bounce off of the support and it's not acting as a range. And instead of reversing higher and reaching the resistance, we ended up rejecting at the EMA and strongly trading lower. Now, once I saw this, I ended up drawing a new downtrend. But remember, the market does like to move in pairs of two. And if you zoom out, especially on um, the higher time frames, it looks like two legs down. You have one leg down, push up, second leg down. Now, usually when you have a two-legged move down, you need more information before looking to widen the downtrend. So I was just waiting and seeing what the market is going to do, and it can't go above the EMA. Now, this is an indicator that there's a lot of selling pressure, and we ended up pushing lower. So once I saw this, this gave me the green light to look for a wider downtrend. So what we like to do is look for or we start at the pivot where the move happened, and we like to geometrically align it with the market structure, something like this. The more confirmation points you get, better. So we have one confirmation point here, two here, it fits great. There's not a lot of space, and it aligns with the EMA. So now that we have the downtrend in play, now we are looking for short positions, right? We traded down into this, the downtrend is still alive, we are looking to take short positions. So using the counting technique, starting from this new low, we have a new low, first entry short, pull back, second entry short, right? This triggered before the previous candle, this triggered higher with another trigger lower. Now we're not at the EMA and we also have a small uptrend in play. So we want to make sure the uptrend plays out and then we can look for either a double trap or we can look for a lower high confirmation. Now we finally pushed up to the EMA and we have a double trap here. Now everyone's candles might have been different, but this one had a green body on mine. So I ended up skipping and I was waiting for a lower high confirmation. So a lower high confirmation is definitely the best confirmation because you're having all the bulls play out, right? Or all the bulls get trapped. You're pushing lower, and this is another failed breakout for the bulls, right? They tried breaking the price higher, and it ended up failing on them and reversing lower. Very nice candle closing below the EMA, and as you can see here, we also have like a little small support holding. We can't break above the EMA, so this was my first trade of the day. Great lower high confirmation, small candle, small risk, high reward, and I scalped it for about 4 points. ATR was about 4 around this time, and you could have easily caught it for 6, and then we ended up trading lower. Now, if we zoom out, you can see we had a small break here. Now, just like, or for anyone who's a beginner, they would consider this, okay, we have a new low here. Wow, that's big. You would say, okay, we have a new low here. But once I saw price rejected the EMA again, and we have another significant strong push lower, this is where, you know, you can widen this downtrend more. And especially because it's such a small break, right? So when it's such a small break, you can definitely consider widening the trend. So I ended up widening it a bit like this. And as you can see, we even have more confirmations now, right? We have one, we have a confirmation here and here. It still fits great. We can barely reverse or push above the EMA. So now we are still looking for short positions, right? So we ended up pushing lower and lower. I actually had this drawn a little bit tighter, so I had a little bit of overshoot, which means price is being oversold. I don't need an RSI indicator to let me know price is being oversold. My trend lines alone will let me know that. So this was a little oversold. So when this usually happens, you can expect a stronger reversal or just a longer correction. Now we ended up going sideways for a bit, nothing really touching the EMA. Let's get rid of this. And we kept going lower, so that's where I widened the downtrend and I got rid of the overshoot. Now we are still looking for short positions, and we have to respect the small correction, so you have to respect this uptrend. And counting from this low, we have a new low, first entry short, pullback, second entry short. Now this is another good high probability setups for many reasons. One, we are holding below EMA. Um, Price is going a bit sideways, but it's okay. We're correcting. We're also attempting to make a new high for the small correction. So it's not really that stacked. And we have a nice bearish bar or engulfing the previous candles. So this definitely is a good setup. We had an attempt to make a new high, close lower. I tried entering here. The issue was it just really pushed down so fast. I couldn't put my limit order. It's a pretty big candle. ATR was increasing. It's about 6 points. So I couldn't get filled on it, but this would have definitely been a great trade. Another push lower. All right. So are we still looking to go short? Yes, this downtrend has not or has yet to be broken above with a new extreme being made. So it is still valid to look for shorts, right? Unless we break above it and then we make a new low, we break the structure of the trend and make a new low, then we can invalidate it, but it is still live. Now we had a very strong correction. Now, a lot of you guys might have been thinking, okay, maybe, this downtrend is over. No, it was a very strong downtrend. If we use my measuring tool, we have about 90 points. This isn't a small trend. This is a huge correction or a huge trending market. So when this usually happens, the only way we would invalidate it is when you can measure from where the move started using the Fibonacci tool. You put it to the lowest pivot or the low of day, and if it retraces 60% or 50%, you can consider invalidating or not even close to that yellow line. So we are still looking to go short. But if the uptrend is very strong, you have to respect the correction, wait for the uptrend to play out, then we can resume looking for short positions. So we have a nice uptrend in play. We're not looking to go long, we're only looking to go short, but we want to wait for this uptrend to play out. So I anticipated for a price to break and make a new high here. We didn't, and we ended up pushing lower. Now, the same way we use the measuring tool to see if this downtrend is invalidated, you can use it to see if this uptrend is being invalidated. So let's grab the Fibonacci retracement, start it from the bottom move, and put it here. Now, as you can see, we retraced that 50-60% mark. So now we can invalidate this uptrend and focus on going short. Not only do we have one trend that needs a new low, we have a huge one. So, double probability that price is going to drive lower. So I was looking for a second entry short from this new low or this recent low. So we have a new low, first entry short, pull back, but we don't have a second entry short. Reason being is we need a trigger higher than the previous candle. This got super close, but it didn't trigger higher. If you took it, I kind of see why. Did I personally take it? No, I am pretty strict with my rules. If we had a little bit more of an extra confirmation, maybe, but I personally skip. But if you did take it, it did end up working for a nice scalp, even making a new low for the bigger downtrend. So now we have a break and a new low for this downtrend. Now, could we automatically right away go and say, okay, we want to look for a reversal pattern or we can go long right away. No, this was such a substantial push down. Like I said, 90 points. We want to see an uptrend that has determination and momentum showing us that, okay, the bulls are back in the game and they are looking to reverse the market. So we had a small uptrend break. Now, we also had another uptrend, and if you guys ever get confused on which trend to use, measure it. You can measure this leg and copy. Now, if this second leg is a lot bigger than the second, invalidate this one and focus on the bigger leg, right? The bigger one takes more precedence. So we are now focusing on this trend and we ended up retracing lower and pushing higher. Now, there was no setups here at all. Even if I was looking for a reversal pattern, there was nothing. There was one here, but you know, it's not the best setup because it formed below EMA. We have a failed second entry short here, counting from this new low. We have a new low, first entry short failure, pullback, second entry short failure, but it formed below EMA and we didn't even get a trigger. A lot of or a big red bar here, so nothing or no good setups here. We had a break, new high. So now we're just waiting and seeing what the next market cycle is. We ended up pushing lower again. Now, there's a lot of congestion here. We're only going to draw the trend or the leg that broke out of it with strong um, precedence or a strong correction lower. So this one over here is what we're watching. We're looking to take a second entry short, never formed at the EMA, nice broad move, break, and new low. So now we're just waiting. At one point, when I saw price starting to go sideways, I anticipated maybe some range behavior because that can usually happen after a big trend has a break and a new low. But we quickly reversed. So I was looking for something like this, maybe expecting some type of range because EMA is starting to go sideways in the middle of these candlesticks, but we ended up having a strong push. Now, this definitely is something where you just want to focus on this uptrend, right? Although we traded lower, there is no wider alternative or downtrend. If you draw it like this, it just doesn't make sense. There's no confirmation pivots. So I was just focusing on the recent structures, so the recent uptrends. So I was looking for a long position here, and the correction did take some time, right? We had a break, attempt to make a new low, push higher. I was looking for a reversal pattern here because counting from this new low, we have a new low, first entry short failure, pullback. I was looking for a second entry short failure here. We never had it. We pushed lower again, and I counted this as a break and a new low for this leg, right? Because this downtrend needed a new low. We had a break and a new low. Now, are we looking to go short or are we respecting the recent stronger trend? Now, this was the recent strong trend. We are looking to go long, right? This downtrend had a break in a new low. The bigger pattern takes precedence. So now we are looking for a reversal pattern. Now, counting from this new low, we have a new low, first entry short failure, pullback. This was actually the first failed second entry short, but it never triggered. We ended up triggering lower and then closing higher. So this is the third high probability setup of the day. Failed second entry short, beautiful bar. We need a new uptrend for this recent structure. Very clean. This was the second trade that I took of the day. And as you can see, slowly but surely, we pushed higher and we made a break and a new high for this uptrend. Now, I started seeing more continuous pushes and pivots higher and higher. So I was looking for some type of alternative uptrend. At first, I was looking for something like this or some type of spike in a channel. Now, for me, this fit the best. As you can see, it fits great geometrically with the market structure, and it's a spike in a channel. As you can see, we had a channel and then it spiked to the right. You always want to draw your trends with the market, right? So if you can see the market slowly, pivoting or aligning to the right, you can draw your trends that way. Now, this was right around market close, and I usually don't like trading 30 minutes before the market close because you can have some volatility spikes or profit taking, or even institutions buying out the bottom, especially when it is a bearish day. So there was no setups here anyway, but if it was earlier in the day, I would have looked for a long setup, for this spike in a channel. We ended up going sideways and the market closed. So that was really it for today. A lot of price action, no fake outs, super clean market where every trend respected its channels and it had a new low for it. We had a strong downtrend that needed a new low. We broke and we made a new low for it. This was my first setup of the day. Great lower high confirmation, holding below EMA, creating a small resistance, two legs up. The more confirmations the better. This one was another great setup. Unfortunately we didn't trigger higher, or I'm sorry, unfortunately we didn't pull back to fill my limit order. And then we had a break, new low, uptrend had a break and a new high. We're just respecting the small corrections and following the recent trends. And then we finally had a nice uptrend that needed a new high, and we took a reversal pattern to complete it, break a new high, and then the market closed. So that was the market review for today. I'll see you guys next time. Take care.